Welcome to the Market Roundup, Maverick traders. This is Rob Reinhold. It is July 11th, and let's get into it. In this session, we're going to talk about what happened today. Lots of big news, lots of big reversals. We're going to take a look at the technical analysis of the markets. We're going to take a look at the sectors. And then always we go through and find some sit-ups. I've got two bulls and a sideways for you.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
I want everyone to take a look at everything on the screen because I guarantee you will not see a kind of day like this again in a long time. These numbers that we're going to talk about today, super rare, lots and lots of good things going on. Let's talk first about the daily news. We got the CPI report. It was supposed to come in at plus 0.1%, and it came in at negative 0.1%. The core came in at 0.1%. That should say 3% year over year. Look, this report was a home run. This is exactly what the market wanted. There is an absolute green light, clear runway for the Fed to come in and give us at least one, if not two, rate cuts this year. The bond market plummeted. We saw bonds close right around 4.1%. That is the lowest it's been in a couple months. Everything liked it except for the high cap tech stocks. So what we saw today is we saw this massive rotation. And I want you just to take a look at these numbers. So we had the Dow that was flat. Take a look at the S&P, down 1%. Down 1% on the S&P. The Q's down 2%. And then take a look at the next one. The Russell up 3.5%. You are likely going to see 1, maybe 2 days a year where there is a almost 6% differential between these two indices. It was absolutely huge. Oil up, gold up. Here's what I want to focus on. So if you were just to turn on the TV and look at the S&P and the NASDAQ, you'd be like, oh, down day. It's a down day. No. Look at the advanced decline line. 74% of stocks went up. This was a massive up day. But if you didn't look under the surface, you would have never have seen it. Now, another thing that's just so crazy is that over the last couple weeks, we've been seeing new all-time high after all-time high. And yet we have been about 50% of stocks above the 50-day moving average. It had been stuck at 50. Take a look at it. On a day when the market went down, all of a sudden we had this jump in this above 50-day moving average. I'm going to show you two charts here. And the first one is the S&P. And the second one is going to be the equal weighted S&P, and then we're going to get into the heat map. Actually, let's just jump over to the heat map first. Here's the heat map. As you can see here, everything is green except for large cap tech. And over the last couple years, large cap tech has become a larger and larger percentage of the S&P. So the S&P 500 is not an equally weighted index. It basically, the larger the company, the larger the score it has on the index. So as we've gotten stocks like Microsoft, Apple, Nvidia get to $3 trillion of market cap, they become a much bigger part of what the S&P does. And it's gotten to a point where, on any given day, whatever happens to these 5 or 6 stocks is going to be a huge deal on what happens to the overall index. They've been climbing higher this whole time. So if we go back to the S&P chart, as you can see, looking at the S&P, we've just been in a bull market, a massive bull market, and we talked about the breakout of the high base. But take a look at this chart. This chart is the equal weighted S&P. Look what that's done over the past month. It's actually been down. It's actually gone down a little bit. So when we take a look at the two charts, drastically different. What did we see today? Well, we finally saw that the average stock is now getting a bid. And we can see the overall stock market actually went down today with a bearish engulfing candle. Now, this is where nuance really comes into play in trading. Now, yes, we always have to play the charts, but we are smart enough to go inside and actually see, okay, what's actually happening. If you just looked at this S&P, I would be looking at this saying, okay, we just had a run to a new swing high. We have a bearish engulfing candle. We're probably going to get a couple of candles down, and then we're going to turn around and make a new run. Okay, that's a decent analysis of what's likely to happen. But if we come over here and I take a look at this and I say, okay, well, equally weighted, boy, the average stock market is breaking out of a month and a half base with a lot of momentum and a lot of volume. Well, which one is it? Is it this chart or is it this chart? Guess what? It can be both. It can be both. We can continue to see a pullback in large cap tech, and it will drag the S&P 500 index lower, while at the same time have a rally in the underlying stocks in the RSP and move higher. The big question is that going to happen? I want to show you one other chart. This is the Russell. Now take a look at the Russell 2000 over this time period that we just looked at. It went lower. It fell. It went down. Look at the buying today and look at where it closed. We close on our highs. So the whole time there was this massive selling in tech stocks, there was massive buying in the Russell 2000 stocks. The big question is, has this market rotation, is it a one-day thing, or does it have some legs? Are we going to continue to see this market rotation? Strictly looking at charts, we still are at a +3. We are at a solid +3, so this market is still bullish. The question is, where do we want to focus our bullishness at this point? When we go into some potential trades, what I did is I went out there and I looked at stocks that were just starting to make a run. The stocks that have had big runs, and mostly it's been in communication services, it's been in tech, and a little bit in consumer. Those have been the hot sectors where all the money's gone, a very narrow rally. I don't want to look at those. I want to find the stocks that are starting to move, that held in nicely during this last month and are now starting to move. So I got a whole bunch of them. Casino stocks look great. Gold stocks look great. Car stocks, Rivian, Carvana, CarMax, they look great. This is where you want to be focusing on these kind of stocks. So here is PENN, P-E-N-N. This is in the casino sector. And you can see we've had a nice base here for almost a month. Nice breakout to the upside. If you don't like this one, take a look at MGM. It looks good as well. So the big question is, how do you play it? Obviously, with next week being monthly options expiration, I really like some diagonals, like an August 19, sell the July 20 against it. That's going to be a really nice play on a diagonal call spread. If you want to be a little bit more aggressive on a vertical, then I think you could take a look at a 2022. I don't see any reason why you can't go all the way up to 22 for this on a target. This thing looks like it has legs, and if the market rotation continues, look, this stock held in nicely. It crept up over the last month. The rotation is now coming into these kind of stocks. Next one I want to talk about is Geo Group. Now this is in the real estate sector. I've started to become more bullish in the real estate sector. Beautiful little high base here. Nice hammer candle today on a breakout. We closed higher. 16 is going to be the target on this one. So 15, 16. You could take a look at a 15, 16 vertical spread. You could take a look at a 14, 16 diagonal call spread of August and July. If you don't like this one, look at other things in the real estate sector. Zillow also looks good. There's good things in some of these sectors. Now I'm going to give you a sideways trade. I don't really have any bearish trades, and let me just tell you all the bearish trades on my list. I basically ran a scan for the worst stocks over the past month that had had the biggest rally over the past week. So I don't think it's time to short them yet, But I'm starting to make a list of things that have been just terrible stocks that are getting a bounce right now. These are the things I want to start putting on for my bearish trades when it finally tops out. But let's talk sideways. This is Johnson & Johnson. The thing I like about this is we've made a really good bottom down here at, let's call it 144. That's a really solid bottom. And this is one... And this is during the period where the average stock has been sideways to lower. Now I think we are in a much better market condition for a stock like Johnson & Johnson, but I don't see any reason to be really bullish on Johnson & Johnson either. So we've got this clear range of, let's call it 145 to 155. We're at 150. Short term, I want to be right at this 150. So if I'm doing like the July 19th, butterfly, I might be at like the 147.50, 150, 152.50. I might be right here. If I'm going to be going out a little bit further in time, I do think that the average stock is going to start to move higher. I do think the rotation is going to continue. I probably want to be somewhere around 152, 152.50. I'd much rather be like in this range for my butterfly. So it's going to be a little bit of a targeted butterfly that is going to float up into this area and make us a nice profit. So this one's going to be a slightly bullish one if you go out more than a week on this. Let's talk about tomorrow's trading. The big question is, will the broadening continue? I think they will. I'll give you reasons. I gave you some reasons. In the trading room, I'll give you more reasons, unless we get some major crazy reversal tomorrow where the whole rally was a one-day rally and then everyone goes and piles back into NVIDIA and Microsoft again. I don't think that's going to happen. I think we are going to get a broadening of the rally. I asked that question last week. Are we going to get a broadening of the rally? The first 3 days of this week, the answer was no. We're now starting to get some broadening. We think that's likely to continue. Tomorrow, we do have some more big news. We have the PPI report. I don't think this is going to be that big of a deal. I think more important is we have earnings beginning. So second quarter earnings are here. We've got JP Morgan, Wells Fargo, Citi, and Blackstone that are going to be announcing. So a kickoff to the earnings season. We're now going to be talking about earnings for the next 3 weeks. We're going to be talking about how to make trades around those earnings reports. Not a big deal. It's just another earnings season. We get them 4 times a year, and we just have to navigate them. Thank you very much, and I will update everyone with the trading room tomorrow. Goodbye.